Welcome to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we look back on last week, we did get the unemployment report on Friday. That showed 559,000 new jobs. It was expected to come in around 720, so that was a miss. What was better than expected was the drop in unemployment down to 5.8%. That was down 0.3. So that was looked at as a bullish report. I discussed this last month. It looks like that employment numbers will start to struggle, just like what we've seen the last 2 months. We saw 226,000 jobs last month. This month, 559. So we're continuing to come in way under expectations. As we go forward, there's something else to consider. A couple of months ago, when the infrastructure plans were announced, it looked like it was going to be very bullish. They're talking about $4 trillion. Well, that now looks like that's not going to happen. Best case, it's going to be multiple months of negotiating. I don't believe they're going to get the big plan through. It's going to be drastically reduced. Therefore, spending will be way off from what expectations were before. Even in the proposal on the bill, the actual infrastructure, the hard infrastructure, was very limited. The soft infrastructure, which is more social programs and more of an FDR type approach, were the biggest pieces. These are starting to look like they're not going to be possible to get through even the House or the Senate. So these programs are going to be in stalemate. It's going to take months and months before we see any progress on these. So this is not going to be a stimulus for the markets going forward. Over the weekend, the G7 did meet. There was an agreement on a 15% corporate tax across the board with the G7. The question that comes in about this alliance is, will it have any effect outside of maybe the big tech companies that's not even going to affect their earnings? It does appear that that's going to be focused on a lot of the larger companies. I don't see that being material at this time. Markets are not even responding. As we look at the action on Sunday night, markets are flat and slightly down a little bit. In fact, we did get an RTX sell signal on the S&P cash on Friday, so we're looking for a couple of days sideways anyway. But there are some momentum issues that are starting to show up that could represent some risk to the markets as we move forward in the short term. I'll go through all those details here in a few minutes in the technical section. As we look forward to this week, the only real economic releases coming out is on Thursday. CPI is expected to come in at a plus 0.4. That comes in a little hotter. Maybe that inflation story will reemerge, but I don't expect to see that have much of an effect. And then, of course, we have the claims and the continuing claims. Claims are expected to continue to decline to around 360. I will discuss that as we get later into the week. A quick mention about our database. We saw very little action there on the short term or the intermediate. Everything remained very stable. I'll go through the details here in a minute. But the setup for this week looks like there could be some weakness early in the week. There's some major support levels that I expect will hold. I don't see a lot of volatility as we come into this week. I advertised several weeks ago that I didn't think that we were going to have the doldrums or the summertime blues. Well, it's now looking more like that will be exactly what's happening. We didn't get sell in May and go away. Now we're coming into the dog days of summer, and it looks like it's going to be somewhat boring, especially with the backdrop that I just mentioned, with not being able to get much done as far as Congress or the House or any kind of new bills or new spending coming out. This could place the markets into this further sideways consolidation that we've been in for about 6 or 8 weeks already. This is likely to continue. I still believe there's a slight upward bias. There are some negative forces emerging. Let's go ahead and take a look at the charts, see how this week is set up. As I review the WaveTech database, we'll start with the weekly. It is currently at 71.27% bullish. It's been very stable above 68 and below about 75%. This is very typical in this cycle. Most of these trades started back in October and November of last year, and they continue to be held. My expectation is that we've got at least another 80 to 100 trading days in this particular cycle. As I look at the sectors, you'll see that many of them have been held for around that period of time, some back to June, December, and October, where a lot of these came in. There should still be a solid forward-looking returns, probably into September, maybe into October of this year. As I review the daily models, we're currently 63.44% long. We did see 321 buy signals, 192 sell signals. So we had a slight positive rotation. The bullish percent at 63.44, remaining above that 62% level. I do expect to see this move up toward the 68 to 72% level over the next couple weeks. As I begin with the S&P futures, we are down we're down to 42.2350. The low overnight's been 42.1950. As we look at the market grid for today, S1 42.18, so we basically are satisfying S1, R1 42.38, high 42.32. My expectations for today is that we're likely to see an R1 S2. We should come down toward this 10-period moving average around 42.01, and that average is moving up about 4.5 handles per session. As we go to the SPX, I mentioned in the opening comments that we did have an RTX sell signal. The RTX on Friday was 42.23, the close 42.29, so that suggests we should go sideways for a couple days, trading down toward S1, S2. As we look at the market grid for today, S1 42.23, S2 42.16. The extreme is 42.02. This level is one of the key levels in the pattern. The major support is at between the 41.74 and 41.70. The PPMs are slightly bullish, but these will turn down when market opens tomorrow. It would take a move above R1 to actually turn the momentum back up. As we look at the market grid for today, R1's 42.36, S1 42.23, S2 42.16. So I would expect to see a move back toward at least an S2, R1, S2 for today. If we did get above 42.36, we'd move toward the 42.43 level. There doesn't seem to be any impetus for that to occur. The real number to watch is that 41.69, 41.70 level. That is the 10-week moving average. The PPM1 on the weekly is up 0.62, suggesting there's only a 30% probability to decline below that level. So we could retest last week's low. If we did trade down to that level, that would be a retest of last week's low. I don't see the market breaking down below that level at this time. As we look at the market grid for this week, S1 42.10, S2 41.89. My expectation is that we could see an S2 41.89, R1 42.48 on the upside on the weekly. I think that's going to be the cap on the market this week. Next market I'll cover is NASDAQ. The NASDAQ is down 20 handles right now. As we look at the PPMs for the NASDAQ, you'll see they're very flat. There's not a lot of upward momentum, very similar to what's going on in the S&P. The key support levels are between the 10-period and the 40-period moving averages at 13,762. We look at the market grid for today, S1 13,713, S2 13,654. That should be around the extreme, at least for today. Upside 13,819 should be the upside resistance. I don't see a lot of upside in this market today. If we did penetrate through R1, then look for an R2 number. We could see maybe a little more volatility, S2, R2, but the primary expectation is for R1, S2. We look at the weekly graph. The 10-week moving average 13,763.
It's up at 0.31, so there's a 40% probability for the market to remain above that. We're trading just slightly above it at the moment at 13,745. But the key level will be the 21-week moving average, 13,435. So we look at the market grid for today. S2, 13,542. R1, 13,872. That is the expectation for a minimum this week. It's very possible that we're just going to have a very quiet week. The ultimate range would be R2 on the upside, 13,991. S2 extreme on the downside, 13,542. The final market I'll cover tonight is gold. Gold continues to trade just slightly below the 1900 level. As I mentioned last week, around 1910 to the 1920 level is going to be major resistance on gold at this time. We're likely to trade back toward the 21-period moving average, which is 1877. As we look at the market grid for today, R1 is 1900. We fell just short of that high of 1894. S1, 1883. We're trading just above that level right now. So at least an R1, S1 with the possibility of an S2 for today. When we go and look at the weekly chart, I continue to expect to see this market remain in this sideways range I've been talking about for the last couple of weeks. And we look at the market grid, R2, 1917, S2, 1866. The key thing to look at here is PPM1, which is up at a 0.87. That tracks the 10-week moving average. That's currently at 1832. And that will be major support in this market. I don't expect to see it trade much below an S2, S3 this week, which will be 1866 to 1852, and the extreme on the upside will be 1917. This will complete the video for tonight. Thanks for watching.
Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you that already signed up, thank you so much.